Hello everyone and welcome to INFINOX Market Insights with me, Richard Perry, analysing markets for INFINOX on Monday the 2nd of August. Now there's a very slight positive bias taking hold through Forex majors today. The dollar has slightly just edged back on its rebound that it had on Friday. The dollar's been under a little bit of corrective pressure in the past week or so, and that's just threatening to come back in again this morning. You've got the risk appetite sentiment through also on indices as well, with edging higher again after a bit of a consolidation over the past week. Indices are looking to move positively slightly to the upside once more this morning, but there's a really heavy week of data ahead of us. We're starting off with the manufacturing PMIs today, where the focus will certainly be on obviously whether the data continues to improve or roll over, and whether the prices paid components continue to remain high. But the focus then turns to a couple of central banks throughout this week and culminating in the non-farm payrolls report on Friday. So lots going on this week to impact on markets. But what we are seeing is certainly the focus also going to be on the Aussie with the Reserve Bank of Australia overnight tomorrow, and that will be focusing on whether the tapering of asset purchases is just held back slightly, considering they're continuing to go back into lockdowns. So with regards to the INFINOX support and resistance table, that is at the end of the video. Now, the charts we're looking out for today, as I said, Aussie is in focus with the RBA, so looking at that chart, whether that can start a recovery. Also looking out for the gold chart, which has been consolidating. Can it break out from that consolidation? And also similarly on the DAX, again a consolidation, but can resistance be broken? So let's have a look at these charts. And onto the INFINOX MT5 platform now, and just starting off with the Aussie dollar. And you can see here that the downtrend that's been in play since the beginning of June continues to be tested. And to be honest, I've been sort of playing around a little bit with this downtrend. I think I had it there originally and then started to think about whether it had been broken. But essentially, you can still draw this downtrend, which being in place because of this spike higher that we saw back a month or so ago, and you've still got the fact that this downward moving moving average, which is the 21-day moving average, is still a big basis of resistance, and that is overhead still. So essentially, this is still in a negative trend, consolidating sideways. You can see that through the momentum as well. The RSI cannot get above that 40 mark really of any sustainable move. So certainly you'd need to see that above into the mid 40s and probably above 50 to really suggest a recovery. But the resistance is clearly there, isn't it? 74.15. The old lows have become the basis of resistance in the last day or so, and it's certainly just still consolidating. However, you would argue still that every time it gets towards 73.20, 73.30, it seems to still find buyers. So this is a consolidation which is holding, but on the RBA, we're looking for any real move to the upside which would break through the 74.15 to really get a recovery. And to be honest, given the fact that it's likely to be a dovish surprise, it could be a downside move. So watch out for that support move, 73.15. And onto the gold chart. Well, we've seen the lines of support and resistance, basically the big ones coming in at 1670 area up towards the 1900 bucks, just over there. And you zoom in here, you're basically trading mid-range, aren't you, between these two blue barriers here. Big basis of support around the 1750, 1760 mark, basis of resistance at the 1830 mark. And just in recent week or so, it's just consolidating around the 1790, buyers coming in around that level, but resistance at 1830. So the question is another sort of failure at that 1830 mark. I'm still trading with a positive bias, I think, through gold. I think the fundamentals are edging gold positively, but you can see here consolidation continues. You wouldn't really want to see the RSI going below 40. Equally, on the upside, if you want it looking for a breakout, you need it above 60. And at the moment, that's very much consolidation. And finally, with DAX, similar consolidation we've seen on the DAX, where we've got the support coming in around that 15,000 mark area up towards 15,700. 15,800 is the resistance on the upside, and every time it gets towards that 15,700 mark, you see the selling pressure coming back in. It's now testing 15,700 again, so it can start, if it can start to close above 15,700, you would be looking at a test of the 15.8 mark, but certainly this resistance is still overhead. And also looking at the RSI, the relative strength index momentum, failing around the mid to high 50s consistently, still in the mid 50s, so you need to see more progress there. But if you can see the RSI above 60, that would really suggest an upside move. But I'm still sort of trading with a positive bias, but I think essentially this is still a range play for now. Thank you for watching this video. I hope you found it informative for your trading. Join me again on Wednesday, where we'll be looking ahead to the Bank of England and also the services PMIs data. So with that, I'll leave you with the INFINOX support and resistance table, and I'll speak to you then. Thank you very much.